Inflation dominating, Simon.
Yeah, how are your wallet and or purse feeling? If they're feeling the squeeze, if your wages aren't going up by about 4%, then you are getting worse off by the day. That's because the cost of living is going up sharply. Inflation's risen again in the month ending April. The Consumer Prices Index went up to 3.7% in April. That's from 3.4% last month. That's the highest figure since November 2008. It also means that the Governor of the Bank of England has been forced to write this letter to the Chancellor explaining exactly why inflation remains so far above the government's and the Bank of England's target of 2%. And in it, he basically says it's to do with fuel costs, it's to do with VAT going back up, and also with the weak pound. Now, Samra Al-Hathi is an economist with Standard Chartered and joins me now. Good morning to you. Now, he says, don't worry, it's going to come down in the end. He's been saying that for some time. No one really seems that worried about it. Why not?
Yeah, we agree with that. The rise can be accounted for by three main factors. The impact of higher oil prices, which in April were about 80% higher than at the beginning of 2009. The delayed impact of VAT rate reverting to 17.5% at the beginning of January. And finally, the sharp depreciation of sterling, which in trade-weighted terms has lost about 25% of its value and continues to put upward pressure on import costs. But all these factors are temporary, and we believe that the excess spare capacity in the economy built during the recession will be sufficient to bring inflation back below target in the medium term. This said, there are a number of upside risks in the near term in the form of if we continue to get further increases in commodity prices, and also if the government decides to hike the VAT rate further at its emergency budget expected in June. These effects will only delay the fall in inflation, but as I said earlier, the spare capacity will be sufficient to bring inflation back below 2% in the medium term. At Standard Chartered Bank, we expect inflation to average 2.8% this year and fall back below 2% in 2011. And with regards to the Bank of England's monetary policy, we now expect the bank to keep rates on hold this year and next year. Previously, we anticipated the first hike in the second quarter of 2011. However, given the expected acceleration in fiscal consolidation, which will likely dampen growth and delay the recovery, we see the bank in no hurry to hike rates at the moment, as the fiscal consolidation will mean that GDP will remain below potential for a couple of years.
All right, Sarah. Well, I think the Governor and the Chancellor both hope you're right. Thank you very much for that comprehensive answer. Let's have a very quick look at the markets. You can see the FTSE's up there, 52. Pounds actually benefit a little bit from that inflation number against the dollar. Vodafone, their profits more than doubled. The shares barely changed. That's it from me. Back to you two.
Simon, thank you.